Good morning. It is Saturday, July 8th, 2023. A little bit of a shorter video this morning. We're going to start with bigger picture charts, the S&P, and then drill down to some individual sort of actionable chart setups. So, start with S&P. Last week was kind of a weird week. Well, first of all, it started with holiday. So the first 2 days of the week didn't really count. Wednesday was a rather quiet session. Thursday, things got more active, and Friday, still more active. Stocks were rallying um, up until about 1 on Friday. And then we got a pretty good sell off into the close. You could see this is a gravestone doji that the S&P printed on Friday. Gravestone doji. Now, the word gravestone, you know, it has a bearish negative connotation. The reality is that a gravestone doji is pretty random candlestick. It doesn't really mean much. Half the time, the stock or the index will go up after a gravestone doji. Half the time, it will go down. So flip a coin. But what I'll say is the placement of this gravestone doji and the preceding action is relevant and quite meaningful in my opinion. So basically the S&P made a marginal new high and then dropped off on Thursday and Friday. And actually Friday was a down day. Even though stocks were up most of the session, they actually closed red. So taken in context with this big uptrend, the fact that clearly we're running into some resistance here around 4,500 on the cash index, 444, 443, 444 on the SPY. It's something we need to pay attention to next week because that was a pretty ugly close on Friday. It's a weekly close, big sell imbalance at the close, and they sold it right till the final bell on Friday. And um, frankly, the non-farm payrolls number was kind of a Goldilocks number, not too hot, not too cold. Revisions to the prior 2 months. So there's clear evidence the job market is loosening up a bit. It's not as tight as it was yet. They sold them pretty good at the close. So we want to watch early next week for confirmation. Also, a lot of people make a big deal about these indicators that this is a bearish divergence. Well, this is actually a setup worth watching. Like this is a divergence worth watching. You had a marginal new high and a lower high in the RSI, and we also have a MACD bearish crossover here. So put it all together, some warning signs, some flashing, I would say orange or yellow warning signs. It's not red yet, but it could get red really quick. We are pretty extended above the 50-day moving average. So a correction back to 4,250, 4,300 on the S&P would be standard and not even be that much of a big deal. And maybe we could be setting up for that here over the coming weeks. But again, the gravestone doji in itself is basically meaningless. Flip a coin. But when you analyze the placement of this candlestick in context to everything else on this chart and Friday's uptick in volume, so you have 2 days of professional selling, Thursday and Friday, get a little cautious. What? No, so the S&P was down, tech stocks were down, but energy, oil stocks had a big session on Friday. So that was kind of interesting. Transports are strong, oils are strong. Look at the oil services up almost 7%. So trying to figure out what's going on here? I mean, this seems to be telling me that inflation expectations are rising if cyclical sectors like transports and oil having big breakout days while tech is selling off. Hmm, that's the market telling me that the message the market is sending me that I'm hearing with that action is that bond yields are going to rise and inflation is going to stay sticky. But if inflation stays sticky and yields are high, then the Fed is going to tighten further, right? So it's kind of circular logic here. It's a little complicated to try and figure this out, but frankly, this is really notable action where oil rallies as much as it did. The oil stocks, the oil services sector, the big producers in the XLE like Exxon and Chevron. Schlumberger had a monster session. Big services company in the oil sector. Schlumberger and Halliburton, two big players, had huge days. So, interesting. Walmart sold off. So, I mean, and that's after making a new high, a marginal new high. But here's another setup where you have a stock that is up pretty good on the year, way up off of its March low. And you also have bearish divergence, MACD bear crossover, and you also just made a marginal new high. And to make it even worse, the Barron's cover is bullish on Walmart this weekend. So, yeah, I mean, that's an ugly candlestick that Walmart printed on Friday, and then Barron's comes out with a bullish cover story on Walmart. So, market could be cruising for a correction here, folks. Okay, gold sector, GDX, Newmont. It's not pretty. It's really not pretty. But at the very next breath, gold stocks are never pretty when they're at or very close to a bottom. It's always awful. The charts look terrible. The sentiment is awful. Um, Sentiment in the gold mining sector, especially the junior sector, is as bad as I've ever seen it now. I mean, I think it's officially as bad. It may not be the worst, but it's tied for the worst. It feels that bad right now. Um, and the GDX is just hanging on to support here at 29, right at the 200-day moving average. So if we're gonna bottom and start to turn up, it's gonna be pretty soon. It's gonna be right around here. If we lose that 29, if we make a lower low, then we're looking at testing the March lows, the February March lows, right near 27. So another 10% of downside is possible for the gold miners. The RSI looks terrible. I mean, it's in bearish territory. It's been in bearish territory for the last couple of months since it rolled over in May. And Newmont. So Newmont's the big monster in the gold mining sector, especially after acquiring Newcrest, 8 million ounces gold equivalent per year of production. This looks like a bear flag to me, but yes, the RSI is under the median line, bearish flag pattern here forming between 40 and 43. But then I look to the left, and well, clearly this 40 to $42 level is big long-term support. So the question is this basing out and finding a bottom, or is it just forming a bearish consolidation before the next rollover? Well, I think we're going to find out the answer to that in the next couple of weeks because Newmont has an earnings report Thursday, the 20th, conference call as well. So that's going to give us a lot of information, a lot for the big hedge fund guys and the analysts in Newmont. to chew on. Um, I wouldn't be surprised if we mark time until then, but from a technical a technical analysis standpoint, this is a pretty ugly chart, and it's down. Newmont is down year to date. It's even down since last summer, and gold is 1930 as of Friday's close. Newmont's trading at levels it was trading at when gold was 1700 last year. So really poor performer here from this big, uh, largest gold producer in the world. So now really nothing inspiring in the gold miner sector, and it feels like we need a couple more weeks here to actually put in a tradable low. From a seasonality standpoint, the gold mining sector usually doesn't find a real tradable low until early August. So mark your calendars. So now some charts. So these are actionable chart setups. Please do your own due diligence. Please uh, risk only what you can afford. I don't know what more caveats I could throw out. These are just my ideas and chart setups that I'm looking to trade or I may be trading right now. MindMed is the first one. It has been forming this consolidation since February. And I'm only really going to talk about the technicals. Obviously, I can talk about the fundamentals, but just for the sake of time and keeping it this video chart focused, just going to talk about the technicals. This is a very nice coil. You can just see how the range is narrowing within this pattern, consolidating between $3 and $4 essentially for most of 2023. And now it is breaking out above the RSI median line and also above this top rail on the daily RSI. And it's threatening to finally bust through this downtrend drawn off the early February high. MACD bull crossover, and you can see that the last three times that MindMed has had a real MACD bull cross, it led to higher prices a couple of weeks later. So pretty bullish overall setup here. It was up 5% on Friday. The high of the session was 383. So once again, it's testing that breakout level. It has tested this trend line over and over and over. This stock has, I think it's almost 10% short interest. It does have some real fundamental catalysts lined up for the second half of 2023, including top line readout from a phase 2B trial for anxiety, their candidate MM120. There's a lot of catalysts here lining up for MindMed, and the sentiment on the whole medical psychedelic space is just completely washed out. You know, if we pull this to a weekly chart, you can see just how brutalized this stock is long term, and it's been basing since last October. So, you know, we're like 9-10 months into a bottoming pattern here in MNMD. So this is one to definitely keep on your radar. Uh, Newfound Gold. So, but going back to the gold sector, NFGC. What interests me about this one is this company continues to produce just incredible drill results. I mean, the kind of intercepts I don't see from anyone else. 14.5 grams over nearly 30 meters, 9.7 grams over 20 meters, 35 grams over 5 meters, and it's just like it's nonstop, right? Uh, clearly, this is a very rich gold deposit, or plural, multiple gold deposits at the Queensway project. Um, Again, I'm not going to do this justice by talking about the fundamentals or how much this could be worth, but the results are as good or better than what we saw with Great Bear in 2018, 2019, 2020, right? Great Bear was bought by Kinross, 1.8 billion Canadian at the very end of 2021, right? So that's a pretty good comp. I think that it would be reasonable to think that newfound gold could one day be worth a similar price tag. I think honestly, the results are so extensive and so convincing to date. I think the bigger questions are for any potential acquirer is probably more on the permitting side, the logistics of any future mine construction, and those are things I just don't have knowledge of. Right, so it's impossible for me to give a proper assessment until I have more information. But I mean, if this is a slam dunk to get permitted, from an environmental standpoint, and the the cost to actually build an operating mine would not be prohibitive. So I mean, it's not more than $2 or $3 billion. Then yeah, I think this could very well go for a Great Bear kind of valuation. And frankly, the fact that the company is doing a 500,000 meter drill program right now, it tells me that they're drilling this thing out for a buyout. I don't think the guys on the management team here at Newfound Gold are mine builders. I don't think they want to build this thing. I think that they're getting it dressed up for a sale. And so it's just about what is that price going to be? What's the price that's going to make sense for any future acquirer? And the only real comp I have is Great Bear. So that's a sample size of one. Now, obviously, Newfound Gold bulls will probably say this is better than Great Bear. I mean, I don't think we can say that yet. It might be, one day. But I also know there's not many mining companies out there that are willing to pay uh, more than $1 billion, certainly not more than $2 billion for an exploration stage project. So unless this is going to be advanced to a feasibility stage and get into the permitting process, then it's going to be tough to get taken out for more than what Kinross paid for Great Bear. From a technical standpoint, 520 on the Newfound Gold on the Amex is clearly a breakout level. This is a very clean head and shoulders bottom pattern. And just notice the correlation to the GDXJ. It's basically got no correlation, none. It's uncorrelated to the gold mining sector. I like that. I like that. Previously, it was very correlated, but Newfound Gold is now trading on its own based upon the results it's putting out from this big drill program. So, if I'm making a trade here, sort of 460 is my big support level, 520 is my breakout level. Use those, reference points accordingly. But this is a nice looking chart in Newfound Gold, NFGC on the Amex. Snowline is another one, actually negatively correlated to the gold sector. So Snowline on the venture has been going up while the gold sector has been going down. Again, trading on its results, and its results have been breathtaking, right? And obviously, they got an investment from B2 Gold, so there's some speculation here that Snowline is also probably not long for being a publicly traded standalone company, right? And obviously, it is summer in the Yukon, so they are out drilling. They'll be drilling for another 2 or 3 months. So you're going to get a lot of results coming from Snowline. And obviously, the market is bidding it up in anticipation of good results. But just look to the left as the gold sector has been weak in the last couple of months. Snowline has been strong, and we are at a big level. This $4 level is a round number. It's a psychological level. It's also basically the all-time high for the share price. And Snowline's market cap is about half of Newfound Gold's market cap. And probably that gap has a lot to do with the fact that Snowline is more remote than Newfound Gold is at Queensway. So it's getting priced at a discount due to the fact that there's not much infrastructure nearby. there in the Yukon. So anyway, those are my 3 actionable charts: MindMed, Newfound Gold, Snowline Gold, and have a great weekend. I'll see you in the trading lab.